This is Real Estate This Week with Stephen Gasque, continuing 16 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and I'm so glad you're here as we talk about how to nail it every time, no matter what kind of real estate you want to do. Just you, me, and the best real estate guests in the country. Today, good news for home buyers. More houses are coming on the market, and that means today's buyers will have more choices and less competition, and possibly stable home prices too. Now, it's not happening everywhere, but in some areas, it really is happening. Let's talk about it now with Danielle Hale, the Chief Economist at Realtor.com. Danielle, welcome to Real Estate This Week.
It's great to talk to you, Stephen. Thanks for having me.
I am so glad you're here, especially at what could be considered a market shift. We're understanding that in some markets across America, more and more inventory is piling on, meaning more people are putting their homes up for sale, and that is bound to change the market dynamics. Danielle, tell us about that.
Yeah, absolutely. So our May 2025 housing report found that the number of homes for sale that are actively for sale, so there's no contract to buy on these homes at all, topped 1 million for the first time since the winter of 2019. This is a really big milestone that the housing market has hit. And definitely exciting news for buyers who've been stuck in a low inventory market for a really long time. That number is up 31% compared to a year ago. So a pretty big jump to get to that 1 million threshold. But it doesn't mean we're all the way back to pre-pandemic levels of inventory. You know, we should celebrate the milestone, but we're still about 14% below what was typical in 2017 to 2019. So we took a really big step forward, but we're still not all the way there, at least on a nationwide basis.
Interesting. And so, Danielle, when it comes to homes coming onto the market, it really only happens two ways, right? You've got an individual seller who decides this is the time, and they put their house on the market. And then you might have new home construction, which adds to the inventory also. So what's the driving factor of all this additional inventory?
A big portion of the increase in inventory is coming from newly listed homes. So those were up 7% from last May. So we are seeing more existing homeowner sellers this year compared to last year. We're losing a little bit of momentum because those new homeowner or those newly listed homes, homeowner sellers, were up 9% in April. So we saw a bit of an unusual dip in the number of newly listed homes in May relative to the previous month. That is a little bit unusual, but they are still up over a year ago, which means they are contributing to that year-over-year growth. We have also seen new construction hold up relatively well. So that is helping in a lot of markets. And in fact, if we look at active inventory, if you take a big step back and look over the last 5 years or so, active inventory is up the most, generally speaking, in markets where there has been new construction. So new construction is a really important part of the story as well.
And Danielle, I know this probably is not part of your survey itself, but I'd like your take on why. Has the shock of higher mortgage interest rates, which kept a lot of people from selling their house, has that shock worn off? Or, prices are still notching up. Is it price? What's your opinion on why more people are selling their homes?
You're right. Yes, we don't have specific data on this, but I think what's happening is that the longer people are in their homes, the more life happens. They have kids, their family situation changes, their job situation changes. The longer you are in a place, the more stuff can happen that maybe makes your current house not the best fit for you. So it creates that desire to move. And then at the same time, the longer people are in their homes, the more they're paying their mortgage down every month. So the mortgage balance that they have on their house is shrinking. At the same time, we've seen home prices remain high. The NAR median sales price continues to go up. Our listing prices are about flat. So most homeowners are looking at a sizable amount of equity that creates options for them if they want to tap that into to make a move. And then, of course, you've got roughly 40% of the population that own their home outright, so who aren't necessarily subject to the lock-in effect because they would walk away with all of the money if they were to sell their home today. So the longer that we move in time from that period of low mortgage rates, I think the more we not only see the desire to move rise for people who are in homes, but also the binding constraint of the lock-in effect, like the pull of that lock-in effect, also lessens over time. So I think that's some of what's happening here.
Very interesting, Danielle. Very interesting. But, we should point out that the increase in inventory is not happening everywhere. Can you give us a thumbnail sketch on where it is happening and where it is not?
Yes, absolutely. So at a really high level, and this gets back to the construction that we were talking about, we're seeing more homes on the market in the Northeast and Midwest, but not as much as in the South and West, which means if we compare year over year, everyone's growing, but we're seeing the most growth in the South and the West. If we compare now versus pre-pandemic, we're at a point where inventories are up in the West and in the South, but inventories are actually still behind pre-pandemic level in the Northeast and in the Midwest. So it really depends on where you are, what kind of inventory situation you face in the housing market today.
And now, we've established that more homes are coming on the market in many places across America. So Danielle, what does this mean to someone who wants to buy a home this summer?
For someone who's buying a home today, no matter where you are, you're going to see more homes for sale than you saw 1 year ago. And depending on where you are, you may have more homes to choose from than you did during, all the way back to pre-pandemic period. So in some parts of the country, the housing market is far more normalized when it comes to the number of options you see. This means in some parts of the country, we're also seeing homes sell a little bit slower than they did relative to that pre-pandemic norm. All 4 regions actually saw an increase in time on market compared to 1 year ago. So it means you have a little more time to make decisions than you did last year, with, again, the biggest increases there in the South and the West. So buyers in the South and the West, I don't think some of these markets may be tending towards a buyer's market. Nationwide, we're not in a buyer's market yet, but they're all showing signs of getting friendlier to buyers. And that means more time to make decisions and evaluate your options, maybe even some opportunity to negotiate with sellers on price or other contract terms. And in general, I think it does set buyers up to be able to make better real estate decisions in this environment because they've got a little bit of the control back from sellers who have definitely had all the cards over the last several years.
Well, Danielle, I know that the biggest single factor that contributes to whether a market is a seller's market or a buyer's market is the number of homes for sale. But I was wondering, since it's been a seller's market for so long, some people might wonder, hey, what is a buyer's market? Perhaps you can tell us.
Yeah, so it's about the number of homes for sale, but it's also about demand for homes in those markets. And we can't measure demand directly, but what we do is we look at the recent pace of sales to get an idea of what demand is like in a market. So we match up the number of homes for sale against the number of homes that have sold recently, and that gives us a rough idea of the supply-demand balance. We call this figure month supply, and it's how long would it take at the current sales pace to sell every home that's on the market today, assuming we're not adding any more homes from this point forward. And in a balanced market is roughly between 4 and 6 months supply. Nationwide, we have seen that month supply figure fall under 4, which is a seller's market, basically going all the way back to 2016. So 9 years. There've been a couple months, during the pandemic early on where we saw that number increase from seller's territory into balanced territory. But we've been in a pretty solidly seller's market for a while now, almost a decade. Um, so we're starting to see that number move back into that balanced range territory nationwide. We're at like 4.4 months supply, which is on the seller friendly end of balance, but definitely in that balanced territory. But it's definitely moving in a buyer friendly direction. And as I mentioned, this is a national figure. Some markets may be on the higher end of things. As I said, up above 6 would be in buyer friendly territory. We're not there nationwide, but there may be some local markets that are closer to or maybe even in that territory.
And Danielle, let's also explain to someone listening to this who wants to buy a house what this shift means to them. For one thing, if there are more houses on the market, they have more choice. For another thing, price appreciation will probably slow down a little with more inventory. And also the competition factor might just be less. What's your take on all that?
Yeah, I think all of that is correct. If we look at the data, sales prices are generally still increasing. But if we look at listing prices, which you'll find in our May 2025 housing trends report, listing prices were up just 0.1% on a year-over-year basis, which is essentially flat. And our data has shown pretty flat pricing among homes for sale for the last couple of years, actually. So we expect to see price growth slow. In addition to slowing price growth, you might also find that if sellers miss the mark and list their home for too high of a price, they will be more likely to cut their home prices. And in fact, if we look at price reductions or price cuts, in May, we saw 19% of homes had some sort of price reduction, which is up 2.4 percentage points from what we saw a year ago. So we have a growing share of homes that have some sort of price reduction on the market, which suggests that sellers are responding to what the market is telling them. If they don't get an offer, they are adjusting their price to bring that more in line with the market. And so buyers may be more likely to see a price reduction. But again, as we talked about those other listing trends, price reductions were roughly twice as common in the South and West as they were in the Northeast. So it's not just the overall market trend that we're seeing, but it really depends on where you are.
I see. And also another factor that could be helping today's home buyers is another Realtor.com report I saw that said more investors are selling their properties than they have for a long time. What's that all about?
Yeah, so we track buying activity among investors, and this is something we've been doing for a while now. And a lot of reports will look at investor buyers, which is an important part of the equation. But investors don't just buy, they're on both sides of the transaction. Sometimes they're choosing to sell. And what was interesting about this recent report is that we found that in 2024, they hit a record high share of all sellers. They were 10.8% of sellers in 2024, which is the highest we've ever seen. And it also helped close that gap between investor buying and selling to the smallest that we've seen since 2019. So big picture, investors nationwide are still buying more homes than they're selling, but by the smallest margin that we've seen in the last 5 years. And in some states, investors are actually selling more homes than they're buying, meaning instead of being competition for potential entry-level buyers, investors might be creating opportunities for those entry-level households, which is a big shift and certainly welcome for those who've been really trying to break into the housing market.
Great news for buyers, but not happening everywhere, correct?
That's right. Yeah. So in general, we are seeing a shift with more investor selling in a lot of places, but in general, investor buyers still outnumber investor sellers, except for those handful of markets, and those include California, Nevada, Oregon, Arizona, Minnesota, and West Virginia.
And Danielle, up to now, we've talked about some really good news for buyers in many markets across America. But there's two sides to every closing table. What about the sellers? I mean, are they going to find it's going to take longer to sell a house? And when they do, they'll make less money than a few years ago? What's going on with the people putting their homes on the market?
So I do think it's important for sellers to have much more market-based expectations when they're putting a home up for sale right now. We are seeing that if sellers overreach on price, they are going to have to be more likely to cut the price. That doesn't necessarily mean that they are walking away with less money. Most sellers are still sitting on a healthy amount of equity and will walk away with a very decent payday after a home sale in this kind of market. But it does mean that they might not be able to sell for quite as much as they expected. And so that payday may be somewhat smaller than they expected. The best remedy or antidote for that, I think, is being really honed in on the market trends when you're setting a price. I think that will help set them up for success. The other thing that's worth keeping in mind is, as we discussed, it does take longer to sell a home today. We are seeing homes sit for longer on the market, which makes getting that price point right up front that much more important, because you don't want to unnecessarily accumulate time on market because you are overshooting on the price. And again, it depends on where you are. If you're in the South and the West, where we've seen a bigger market slowdown than in the Northeast, you'll probably want to adopt a different pricing strategy than if you're in one of these markets that remains relatively competitive.
I see. And Danielle, we should remind people who are thinking about selling their home that if they shoot for a sky-high price, they're not only presenting that price to potential buyers, but also to the potential buyers' real estate agents. And those agents will tell their clients that's overpriced. So you're really not fooling anybody if you try to get too much for your house.
I think that's a good point. I think, in the U.S. market, buyers have agent representation very often, and sellers also have agent representation. So you're not dealing with uninformed parties. And so you do really need to make sure that you're matching the market when you're listing your home for sale.
And also from a seller's perspective, we hear so much about the new rules in real estate, and that sellers really are going to be advised that they have a choice when it comes to the commission. They can either say no to paying the buyer's commission, or they can say yes, but whatever choice they make, it needs to be informed. Do you think that that's affecting anything in the market at this point?
I think it is an important consideration for buyers and for sellers in today's housing market. I mean, it is something that sellers should have an informed conversation with their agents about, and buyers as well need to talk to their agents to understand what's shifted in general. So we don't track these trends. Most of what I've seen suggests that we haven't seen a whole lot of change in the market yet. And I think the fact that many parts of the country are shifting in a buyer-friendly direction suggests to me that sellers are going to be incentivized by the market to continue to, in many cases, offer compensation that a buyer can use to compensate their agent. So I don't expect to see a big shift in the norms of who is paying whom in the transaction. But that's something that we certainly could see in the future. But I think these market conditions are probably going to help reinforce what has been the norm in prior years.
And Danielle, I've got to tell you that anecdotally, I've asked many, many real estate professionals what they're seeing. And everyone has told me that this is not a big change, but this is just kind of the rules of real estate. But it's not really affecting transactions. Does that surprise you?
No, that sounds about Right. I have gotten more questions from, family and friends. I'm definitely not a real estate agent, but because I work in this field, people do ask me questions, and I have gotten more questions from my personal network on agent commissions recently. But the answers do seem to be that the day-to-day, way that business is done, most sellers are still offering some form of compensation for a buyer's agent. So I don't think it's been a big change.
Excellent. Excellent. And Danielle, just to wrap it up, in what could be considered a market that is shifting in some parts of America, what's your forecast for the summer of 2025 when it comes to buying and selling houses?
For buyers and sellers in the market today, it's important to know that that buyers in many parts of the country are getting more leverage as we see more homes on the market for sale and a slower pace of sales, and that time on market is growing. So buyers are gaining a bit of market power that they haven't seen in many years. And that's, I think, going to be good news for them to get across the finish line and feel good about home purchases that they're making. At the same time, sellers in today's market need to be aware that they're the ones who have to think about competition a little bit more than they have if they've sold a home in recent years. And so they need to make sure that they really do their research and work with a professional advisor who's going to help them price their home well so that it can sell in a reasonable time frame and at a price that is in line with their expectations.
Well, Danielle, I really want to thank you for being on the show today and offering up such great analysis of what's happening in today's market, a changing market. And I really want to thank you for explaining every bit of it on today's show. Thank you, Danielle.
Thanks for having me, Stephen.
You're very welcome. Danielle Hale, the Chief Economist at Realtor.com.
You're listening to Real Estate This Week with Stephen Gasque.
And now it's time for Beyond the Basics, in which we bring your real estate knowledge to the next level. And today, let's talk about an important part of selling your home, a part that everybody wants to know about, and that is, how much money will you come away with when you sell your house? Your net profit. The money you can actually put towards your next place, or money you can bank if you don't need it for a down payment on your next home. And real estate professionals will tell you there's one way to figure that out, a way that's usually accurate to the penny. And we're talking about the seller's net sheet. It's a document that usually appears after you get an offer on your house, accept it, and sign it. And it becomes the contract of sale. You can't really produce it before that, because before you have a ratified contract, you really don't know the exact sales price. But once you do, it's off to the races. The seller's net sheet looks at what's coming in and what's going out when you sell your house. Obviously, the amount that's coming in is the sales price. So if your house sells for $500,000, say, that's what's coming your way. But before you start spending it in your mind, remember, a lot of things will come out of that $500,000. You don't get to keep it all. And the net sheet examines every dollar that comes out of that profit. Okay, here we go. The biggest deduction will be the amount of money you still owe on your mortgage. So, if you still have $200,000 to pay off, that brings that $500,000 down to $300,000. Okay? But of course, if you've already paid off your mortgage, no payoff required. And that would be really nice. The next deduction will be the commission. For your real estate agent, and maybe the buyer's agent too. The amount of that commission is negotiable, and it's what you agreed to when you listed your house for sale. And the same thing goes for the buyer's commission. You would have been advised up front that you have the choice to help the buyer or not. But again, all that happens when you list your house for sale. Next up, taxes. If you have any unpaid property taxes on the place, you'll have to pay those up to the day of closing. And that makes sense because you owe taxes on the time you own the house, but not a day later. The same is true of monthly bills: electricity, water, sewer, gas, oil, internet, condo fees, HOA fees, or anything else. You'll have to pay what you owe up to the day you sell the house, but usually that's not too much. Also, did you agree to make some repairs? Well, if you have not paid for those repairs yet, that money will come out of your net sheet too. But make sure, if you've already paid those bills, to provide receipts to the closing attorney. And speaking of the closing attorney, their fee also will be figured in on your net sheet. Now, it might sound like a lot is coming out of your profit, but remember, the only big-ticket items are the mortgage payoff and the commissions. After that, it's really not big money at all. But the net sheet does something wonderful. It gives you absolute clarity on how much money you'll walk away with. Money is a huge part of real estate, and it's always good to know exactly what's coming in and what's going out. And thanks to the net sheet, you've got that covered. Next time on Real Estate This Week, a successful settlement, a comprehensive look at closing day, and what you'll need to know if you're the buyer or the seller. Plus, how to keep the deal on track and make sure it doesn't fall apart. That's next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every Thursday, everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.